Okay, so swing trading using index and currency futures on daily charts. And let's get rid of do this disclaimer. Anything I'm showing you today is for educational purposes only. What we're showing you is how myself and my trading partner, Becky, how we profit from the markets, how we go about making decisions, manage trades, generally speaking, and how we trade. But we're not making any kind of recommendations for what you should trade, that type of thing. But we're showing you how we go about profiting from the markets, specifically for today futures. All right. These are the only futures contracts which we trade. Australian dollar, British pound, Canadian dollar, euro, S&P, NASDAQ, Russell, Swiss franc, and the Dow futures, YM. These are the only ones we trade. And with this grouping, it gives us some very, very high probability trading opportunities, because these are the ones we've been working with probably since 2007 or 8. And we're very familiar with them. And they work for us. We have been proven, strategies proven, we know it works, it's consistently profitable through whether it's a bullish market, bearish market. We know we're going to be coming out at the end of the year profitable trading these strategies. So it is this is our grouping, especially the currency futures. The currency futures have been our bread and butter for a long time. So today we're going to be actually focusing on the currency futures, with in particular the euro and Australian dollar, which are our two favorites. Those give us the absolute best results of everything you see on the screen right now. Aussie and euro give us our absolute best results. So whenever we see an Aussie or euro trade valid, I'm making sure I'm in. I'm not going to miss that trade. That's the money trades, basically. All right. Strategy we're going over today, some of you have seen, some of you have not. It's a short strategy. It is one where we see become valid after market's been rallying, and then starting to turn over to go downward. That is where we see this type of sell signal. Is there anyone in the room today who is totally new to futures, has never traded futures before, knows nothing about it in any way, shape, or form? You can either type it in the chat window or just unmute and go ahead and speak. If you'd like a real meeting, just don't raise your hand, I won't see it, but just go ahead and say something if you'd like to. Nick?
Yeah, I've been doing the micro NQ, right? That's
okay.
And I've been using TA quite a bit.
Okay.
And I'm still paper trading though, and I'm trying to see whether the 5-minute works for me or whether the 60 minutes works for me. I look at both charts.
Okay.
And then I look at 5 minutes. I don't do 1 minute at all. I'll go burn too many times. I just don't do 1 minute at all. It's just too risky, right? Too volatile.
Okay.
So
cool.
Go 5 minutes or 60 minutes. And I'm trying to think. I think I've got it sorted out, but I want to learn this your technique as well, right?
Okay.
Yeah.
All right, so here's what we found. We used to day trade, myself and Becky. We started our day trade. Everyone starts out day trading.
Yeah.
1 minute time frame, 5, 10, whatever it is, right? 100, a couple hundred tick time frames.
Yep.
So what we found out as time went on, the same amount of money we would make or lose sitting there for several hours every day, staring at things going up and down on the screen, is the same amount of money we would make or lose sitting there for minutes every day, trading on a daily chart.
Okay.
So that is our evolution, and that is like any other business. We start out in many companies, many different types of jobs, doing the grunt work, right? We're the low end of the totem pole. They do all the day-to-day labor work. But as time goes on, you get moved up to supervisor, manager, executives, and as you move up, you find yourself actually doing less work and being paid more.
Very good analogy there.
Okay.
Very good analogy.
That is the same thing we found from trading. The day trading, that's the grunt work. You literally have to work for every dollar you make, you have to be sitting there and waiting for the opportunity, capitalizing on opportunity in real time, and then being fast enough, smart enough, calm enough, well enough planned and adequately equipped with the right tools to capitalize on it in real time. But you always have to be there in front of the market, in front of the computer. If you're sick, you can't think straight. If you have other things to do, you can't make money. So as we evolved by being around other people who made us more knowledgeable, who we learned from, that is when we got away from the day trading and got into swing trading on daily charts, because we were surrounded by different people that showed us the light. Okay. But yeah, the same amount of money you make or lose day trading is the same amount of money you make or lose swing trading, except it's a lot easier, a lot less time and effort. Instead of looking for grab one tick or 1 point, my target might be 50 points.
Okay.
It might be 200 ticks is my first target. That's the difference. So you also don't need as big an account to make good profits. Day trading, you might need 10 contracts moving 1 tick.
Yep.
But and when you're swing trading, you might just need 1 or 2 contracts moving 50 ticks. So now you need a lot less capital to make the same amount of money. And that makes a big difference, because margin ain't cheap. So margin ain't cheap.
Yep.
And we're going to go through that a little bit right now. So this is going to be our first strategy. The bear attack is going to be a short strategy. First, I want to go to website. It's going to be my broker's website. I'm going to switch to that. And then we're going to take a look at some of the futures contracts. And
just still use Ninja platform?
Still use Ninja for the analysis, but we trade on the Schwab platform for actual live trades. But yes, Ninja Trader for analysis.
A 7 or version 7, still version 7 or 7, 8 or 8?
I'm using 7. We have a couple of people I'm working with who have switched over to 8. Either one's fine. If I'm still focusing on 7 until I don't have to anymore, until I'm required to go to 8. With people who want to do 8, I just give you all the indicators and you can set up your charts on 8. So either one's fine, but my focus is still on 7 until I have to move to 8.
Okay, I've got 8, yeah. Okay.
Okay, so let's go to, you're seeing right now is the Schwab platform and the futures products tab. These are the various different types of futures products. So I want some people to make a note of some numbers, and because we're going to use it a little bit later on. So today we're going to go with currency futures, and the benefit of some of the futures contracts is that we have micro futures available. Australian dollar, AD. So, and Australian dollar also has M6A, which is the micro version of it, which is 10 times smaller. So on the full size contract, we usually we don't do half ticks, but 0.0001 is going to be in $10 increments each tick, because we don't do the 5th decimal point, but just the 4 decimal points. So each increment is going to be $10. But with the micro futures, each increment is $1. Okay. Most of the people I work with use micro futures unless they have much bigger accounts, then they'll use the full size contracts. So today we're going to look at euro. So make a note of this, that 1 tick in the euro is $1.25. Go ahead and make a note of that. 1 tick is $1.25 in the euro micro. Make that note, write it down somewhere. And let's take a look at also the micro on the Aussie dollar. On Australian dollar, 1 tick is $1. On Australian dollars, micro futures, 1 tick is $1. Okay. Now let's look at the margin for each one of those. currency futures. If we were to get the full-size contract for Aussie, we need $2,057 in our account as margin just to have the position open, okay? So maintenance margin here is you basically have to put up 25% of the, I think it's 25% of the actual full value of the contract. So I have to put that much money up just to open one contract. So that's the margin. And so the micro Aussie M6A, $206. Make a note of that. The margin for the micro Aussie is $206 per contract. And the margin for the Euro micro is $291 per contract. We will use those numbers later on to make sure you understand it. The Euro margin is $291 per contract, and the Aussie micro is $206 per contract. All right. Now, on the platform and whatever broker you have, you should have all of the futures. If you have futures available on your at your broker, this type of information should be available. I'm on Street Smart Central, which has all this beautifully laid out. This used to be Options Express, and they basically, when Schwab acquired Options Express, they really didn't change anything on the platform except the name at the top of the screen. They changed from Options Express to Schwab Street Smart Central. So this is a platform I've been trading on since 2006. Really hasn't changed much. For people like crypto, what's the margin on one contract? $62,000. So that's how much money you need just to open one contract. That's not risk. That's not how much you might lose. That's just to create one contract. You need $62,000 in your account just to trade one contract. So you got to have some good money if you want to. I know micro futures exists, but not every broker has micro futures available for crypto, but it does exist now. But you got to find the right broker that actually has that available. All right, so now, so you got the margin and you have the tick size. I am now going along the way. If you have any questions anywhere along the way, either unmute and ask me, or go ahead and type it in the chat window, and I'll see about getting to it as soon as I see it.
Yeah, obviously it's Nick again. Sorry about that.
Yeah.
So can you execute your orders using Ninja as well?
That's only for day trading. Because all of your, yes, you can, but that's for day trading. So, but absolutely. You can't swing trade on Ninja because once you turn your computer off, all of your trade management is shut off also. Your trade management only exists on your computer, not at the broker site.
Okay, so what if I leave it running overnight then? Is that, or leave the computer running overnight?
How many nights do you want to leave it on? Because if you're swing trading, it might be weeks.
Oh boy, yeah.
You know what I mean? So that's the thing. It's like Ninja Trader is really a day trading platform, which you can program to do almost anything you want if you have the knowledge and ability. But it's great for day trading. That's why we got Ninja Trader. We have a licensed thing since 2006. It's awesome, but it is day trading. Because when I first used Ninja, it was with John Carter, and back then he recommended anyone who's going to be seriously day trading to get a universal power supply on our computer. Because if you're going to be seriously day trading, if your power goes out, and we're in California, the power goes out, right?
You're right.
Especially California.
Yeah.
If the power goes out, you're screwed.
Yeah.
Exactly. So he had recommended, if you're going to be a serious day trader, to have a UPS, because you can't lose power to your computer if you're day trading, because your trade management only exists on your computer. It'll be open contracts at a broker, but you can't have your broker with open contracts and no stop, because at some point in time, the time you lose your trade management will be when the market goes crazy and goes way against you and wipes you out. I know that's happened to some people who I personally know. It's happened.
Okay. Right.
right.
Okay. Thanks. Thank
All
you.
right, so let's go. I'm going to switch back to the chart now. I'm going to first I'll go back to the trading plan and then I'll switch back to the chart. I want to give you the trading plan really quickly. And then some of you have seen this before, the setup trigger trade management. This structure learned from Jake Bernstein way back when, probably 14 years ago. First started working with Jake back in 2009 when he moved to California and made his whole trading life free to us, available to us, and taught us freely, wanting very little in return. Unfortunately, he got even too little in return and stopped doing stuff for free eventually, but learned a lot, especially how to maximize profits. So setup is what we look for. So if we are just doing total visual analysis, is what we look for. It's two lines crossing. We're looking for two lines crossing down. And this is a summary of the trigger. We're going to there's a lot more detail in the full trading plan, a lot more detail. So it's setup trigger. So the setup is what you look for. The trigger is something to confirm. So this just seeing something, two lines cross, is not enough to place a trade. We need to see something else to take us from, okay, I see a possibility. Okay, if we see this trigger, it means if we combine the setup and the trigger, then our probability goes way higher. And now we get the trade management. So if we do our trade management in a certain way, now our probability goes even higher. Just so you know, what we're looking at with Aussie dollar and Euro dollars is equal to 85% winning trades. And if you go down in your handout, you'll see the list for this particular strategy. These are all the trades for this strategy going back to 2003 with this strategy on Aussie and Euro. It's not that it's not good in other ones also, but like I said, my two favorites are Aussie and Euro, but we maintain stats for all of these different futures. But Aussie and Euro are close, those are the big winners. So when they become valid, we trade them. So we're going to take a look at a Euro trade and go through the trade management so you kind of understand it and how money is made and structured risk. Okay, now I'm going to go to the chart. Okay, you should be seeing a chart now. This is on NinjaTrader. And this is, these lines here are the trigger lines. This is a bullish cross. The lines cross up and they cross down. And a bullish cross, this is plot 1, and this is plot 2. When plot 1 crosses below plot 2, now this is plot 1, and this is plot 2. So lines just keep crossing and crossing and crossing over time. Cross down for bearish, cross up for bullish, cross down for bearish. Plot 1 crosses above plot 2 for bullish. Okay, it's an ongoing thing, and we're going to see the trigger lines on many of our charts because they've kind of become a standard for many of our strategies, both on futures and for the ETF options. This plot 2 is the linear regression line. That's what this is. A linear regression line is plot 2. You'll find that linear regression line available on most trading platforms, or excuse me, analysis platforms. And this is a moving average of the linear regression line. So here's the linear regression line, plot 2 going up, going down, and this is the moving average of the linear regression line. It's not two different moving averages. It's one moving average of the linear regression. All right. So if you don't know what linear regression is, just Google it. It's a mathematical concept, but it works extremely well for our applications and how we choose to use it. So it tracks price nicely, very nicely. All right. So if you take a look at a data box on the left side, when the
Eversley, could you Could you repeat what the difference between plot 1 and plot 2 is in terms of linear regressions?
Okay, plot 2 is the linear regression line. Plot 1, in this case, is an 8-period moving average of the linear regression line. So plot 1 is a moving average of plot 2.
Thank you.
Right. So we take a look at the data box. Sometimes you can't visually even look at the two lines and see if they crossed or not because they're too close to each other. But from a quick visual reference, here's plot 1 and plot 2. And you're going to see, you see the plot 1 numbers are filled in. The plot 1 numbers are filled in, plot 1 up when it's in a bullish cross, plot 1 above plot 2. When you're in a bearish cross, you're going to find the plot 1 down numbers filled in because it's now in a bearish cross. Okay. But on the days the two lines cross, you're going to see all 4 numbers filled in. It's a quick visual reference. Those are crossover days. All 4 numbers get filled in. See 2 numbers filled in, bullish, 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 still bullish, crossover, all 4 numbers get filled in. Quick visual reference. Because there are sometimes you literally, like right here, you can't see that crossed over right there. But here, bullish crossover. Here, all 4 numbers filled in, that's a bearish cross. Okay. So we're going to be looking at the data box for when the 2 lines cross bearish. So when plot 1 crosses below plot 2 is going to be right here. Okay. So if we were doing our analysis every day, each day we're looking for setup. The setup that's on a trading plan, we're looking for lines to cross bearish. It goes really fast. Did it cross bearish here? No. Next day is after 2 p.m. Pacific time, you do your analysis. Is all end of day data. Next day, did it cross bearish? Nope. Did it cross bearish? Nope. Did it cross bearish? Hey, the 2 lines crossed. Now I have something to look at. So now I see 2 lines cross. So now I go back to my trading plan. I go through all the steps and make sure everything, just a checklist, all the things valid. Yep, I have a good potential trade. I go to my stacks. Yep, it's 85% wins or better. And on the futures, we look for 80% wins or better. Those of you who've been trading our option strategies, it's 84% wins or better. But for our future strategies, 80% wins or better. And we'll go through some of the math on that a little bit later on. So you see how the numbers play out. All right. So we see we have a bearish cross. Now we have a potential trade. It meets all of our criteria in our trading plan. It's 85% wins. Okay, so let's set this trade up now. All right. So we need an entry, a target, and a stop loss, and we have to determine risk. Our risk on this trade, for first, what's our stop loss? Our stop loss is going to be 10 ticks above the high of these 2 days. So if you look at the data box, the high is 1.1176 on this day, and the high is 1.1177 on this day. I'm not looking at the last 5th decimal point. I'm just working with the first 4. That's it. All right. So if we increase this by 1, so for anyone out there, this high is 1.1176. This is 1.1177. So this high is the highest in these 2 days. What is 10 ticks above this high? Anyone? Feel free to say it or type it in. 10 ticks. Remember, we're looking at 4 decimal places only, not the 5th. We don't care about the 5th. We're dealing with 4 decimal places. What's
1.1187.
Great. Can go ahead. Someone go ahead and type that in the data box also in the chat window. 1.1187. So we'll reference it in a little bit. Someone type it in 1.1187. Thank you, Nick. So that's where our stop loss will be. Our entry price will be 10 ticks below this low, the low of the signal day. We call this our signal day. That's the day we got our valid trade signal. We're calling it the signal day. How we trade on futures, we only go short if the market is actually going down or continues to go lower. And we only go long if the market continues to go higher. So we're going to put in an entry below the low and have a sell stop. A sell stop means when the price goes below that level, we will enter the position. If the price never goes below that level, we will never enter a position. Okay, we only use sell stops and buy stops on our currency futures. That takes care of so many fake outs. All right, so the low is 1.09, this would be 1.1090. What is 10 ticks below that? Low is 1.1090. What's 10 ticks under that? The data box 1.1090. What's 10 ticks lower? Anyone?
1080, isn't it?
Yep.
80?
So
1080,
please go
yeah.
ahead. Go ahead and type in 1.1080.
1080, that's right. Yep, there you go.
Okay. So now we know our entry price and we know our stop loss price. Now we're going to determine risk. How much dollars we're going to risk. Now, let's say for this trade, we want to only risk $500 for the trade max. Okay, so how do we determine that? How many contracts and everything? Okay, let's go through some math now. How many ticks different is there between the entry price and the stop loss? What's the tick difference? How many ticks is that difference? That's going to be our stop. So how many ticks is that? So between the two numbers, we just calculate entry and the stop. How many ticks difference is that?
Isn't it 7, right? Yep. Isn't it 7, obviously? 87, 81 is 87, isn't it?
Are you doing math in your head?
I am.
Don't do that. Don't do that, please.
Oh, yes, right, you're right, you're right.
Use a calculator, because that's what
I was
happens.
looking at the last two numbers, yeah.
The difference in between
right.
the entry and the stop, how many ticks?
Yeah. Somebody's put in there 0387, yeah.
You calculated how many?
Somebody put it out there 0.0387, isn't it?
It's the difference between 1.1187 and 1.1080.
Yeah, isn't that right?
Now you're way off. Way off.
Oh boy, I thought Olga was correct, right?
Those ticks down. What's the difference?
Oh, there we go. Was it 0.01?
Olga, you are off. How'd you get off?
Yeah.
By that much, Olga? Correct, Nick.
Yep,
So
yeah.
look at your calculations, Olga, and see what happened in your calculations. Should be the difference between 1.1187 and 1.1080. 107.
Yeah.
So that's 100.0107 is 107 ticks. 4 decimal places, 107 ticks. Okay. How much is each tick worth? Remember that number now. How much is each tick worth?
$1.25 for euro, dollar for Aussie.
Okay, so we know the $1.25 per tick. And so if our stop loss is 107 ticks, what is 107 times $1.25?
Yep, multiply.
And type the number in.
Okay. 16375, isn't it? Yeah, okay.
You got that sound that looks pretty close to being right. So, okay. So you know our stop loss is 107 ticks, and each tick is worth $1.25. So our total risk for one contract is $133.75. So if we have one full loss on a trade, we have one full loss on one contract, we're going to lose $133.75 plus whatever commissions they might have. Okay. So if we want to risk, let's say, around $500 per trade, how many contracts can we buy? That would be 500 divided by 133.75.
Yeah.
What number is that?
Yeah, 3.73, yeah.
Okay,
Mhm.
and let's say we can, Olga, we'll go with your rounding, you rounded off at
Mhm.
3. So you can
Yeah.
either round off at 3 or 4. If you're
Okay,
doing
round up.
3, then you are risking $400 basically. If you're doing 4, you're risking a little bit, you're risking a little bit over 500. So either 3 or 4 contracts. Let's go ahead and say 4 contracts. You're going to, just because it's a little bit closer to 500. 3, you're risking 400. And if you want to do around 500, you do 4 contracts. I'll take just a little bit over 500. So let's go ahead and say 4 contracts. All right. Well, let's get the exact number. If you do 4 times 133.75, what's that exact number? 4 times 133.75. Should be about 100. Should be about 530 something.
Yeah, 535.
Go ahead and type it in.
Yeah.
Okay.
There you go. Okay. Yeah.
Okay, so let's say we're going to get 4 contracts and our total risk on the trade now. So when we say risking 500, it's never exactly 500. It's going to be right around plus or minus in that neighborhood. So we decided we're going to buy 4 contracts, or short 4 contracts. If everything goes horribly wrong and we get stopped out, we're going to lose $535. Okay. That's set. Your risk is set. We've just done more calculations than probably 80 to 90% of traders do. We have an entry, we know we have a stop loss, we have a risk set. The only thing we haven't calculated is a first profit objective. Okay. So the way our profit objectives work, we either going to go with the 40% of the risk, 45% or 50%, and we have stats for all of that in the trading plans, and different amounts of profit and loss and percentage of wins to loss. The highest percentage winners is going to be a 40% of the risk. So if we're risking, if our stop loss is 107 ticks, what is 40% of 107? Type it in. %40 of 107.
428, isn't it? 428.
Let's go ahead and type it in, 40%.
Right,
Okay, that's 42. Okay, let's say 42.
Yeah, missed the point, yeah.
So 42 ticks. I like to round down on targets, make it a little bit smaller, make my stop a little bit bigger, but that's my thing. So I say 42 ticks out is our first target. Now, our entry price, we already determined, is what? I can scroll up. Our entry price is 1.1080 is the entry price.
Mm-hmm.
What is 42 ticks underneath that? 42 ticks subtracted from 1.1080 is what?
1.1080.
That'll be our first profit target.
Minus 1.42. 1038,
Okay.
1038, isn't it? Something like that.
Okay. So we have, now let's take a look at this now. Back to the chart. We're going to get into the trade 10 ticks below this low at 1.1080.
Mm-hmm.
So we get this trade valid this day. It's now after 2 p.m. Pacific time. We'll look at our chart. We see a valid trade, and we're going to set up to go ahead and take this trade when the market opens after 3 o'clock. So you actually enter the trade after 3 p.m. Pacific, because the market's closed from 2 p.m. to 3 p.m. You don't have to rush to be there at 3 p.m., but try to get your trade, your analysis done and trade set up probably sometime in the next couple of hours, sometime between 2 and 6 is usually the best time. You can go later also, but that's usually the best time. You don't have to be rushing, but get it done that afternoon sometime, preferably before 8 p.m., preferably. What happens after 8 p.m., all the markets in the world are open and trading and stuff is already moving. So the earlier you get that time of the afternoon, nothing's open. The world is asleep. So the markets are nice and quiet. So there is a lot of movement yet, so we can get in very quietly and before the stuff starts moving around too much. The hours are only, it's closed from 2 p.m. to 3 p.m. Pacific time. Other than that, the markets are always open. Always open. Just different parts of the world wake up at different times and things start getting active at different times in different parts of the world. But the futures are always trading 23 hours a day. Just that it gets busy when all the markets start opening. It gets more active. All right, so let's set this trade up now. We're going to we go to our trading platform where we are placing our trades, and we know we're going to get 4 contracts. So what you're going to do, you're going to sell. You're going to sell. Yes, Olga, it's the same hours for the indices. They're closed from 2 to 3 p.m. Pacific time, same as the currencies. Some other markets might have some different hours, but as far as these currency markets and index futures go, they only close from 2 p.m. to 3 p.m. Pacific time. And they're open the other 23 hours. All right, so we're going to set up an order to sell 4 contracts, sell stop, not sell at market, not sell limit, sell stop. And that's going to be one of the order types on your platform. Sell stop 4 contracts at 1.1080 with a 1 triggers 2. So your entry order is to sell stop 4 contracts at 1.1080. That's the entry order. That's a conditional order now. Upon that order being filled, your target and stop loss will then become active. So once that order is filled, it will automatically create your stop loss and your first profit target. And your stop loss is going to be the 10 ticks above this high, which is 1.1187. That's going to be the entry form of stop loss. And your first target will be a limit order of, what would you say, 1.1038. Okay. That all goes into one order form. So in one time, in one order form, you're putting in your entry, profit target and stop loss, and walking away. So sometime after 2 p.m. on this day, you put in your entry order, target, and stop loss. That order to enter the trade has 2 days to fill. If it's not filled within 2 days, it meant the market was going up or sideways. It never went down. Let's go forward 1 day. The low this day is 1.1051. So the order did get filled within the next 24 hours. As soon as the market went lower to 1.1038, excuse me, 1.1080, your order was filled and you should get a notification from your broker that a trade's been placed. It's smart to double check to make sure your stop loss and first target are all been placed for you correctly and they're good till canceled. One of the mistakes I see people make is that they accidentally make it a day order, and literally your targets and stop loss will cease to exist within 1 day. So that your target hits your target and goes the other way, hits your target, and there's no order to execute. So you can't book any profits, and it goes the other way, you take a full loss because you got to make sure that your order is correct, double check things. Once your order is filled, just a quick, takes 10 seconds to double check that your target and stop loss are in place correctly, didn't make any typos, and you're good to go. Nothing to do. The trade will now either be a win or it will be a loss. That's it. 80% chance it'll be a win, or 20% chance it'll be loss. That's all it is. All right, the next day, it did not go lower. The low, your target is 1.1038. The low it got that day is 1.1051. Target not hit, goes back the other way. Now, keep in mind, let's say you did not get into the trade this day. You were busy. You have other things to do. You haven't missed the trade yet. You didn't miss the trade. You come in a day later even, and you see, that trade was valid yesterday. I totally missed it. Let me see, will the target hit yet? No, but the entry was triggered, but it didn't get all the way to my target. This trade is still good. I can get in here, I get in here, I can get in here. 2 days later, I can still get in this trade because the entry was triggered and then pull back. So now I have a better entry for bigger profit potential and a smaller stop loss. Even better deal. My percentage probability of having a winning trade hasn't changed, except now my potential profits has increased by a magnitude because I'm getting in at a much better price than expected. And my stop is going to be even smaller now. So now I have even better potential trade. That's something to think about. Okay, next day, whoop, cha-ching. It did go higher, but it never went above my stop loss. My stop is at 1.1187, and the high this day is 1.1177. It went up, might have scared me momentarily, but I'm good. I'm in the trade. Drop, boom, hit my first target and then some. Okay, book my profits. Let's look at some actual numbers now. Then I'll show you some other numbers in a little bit. If our first target was 42 ticks, what's that? And we had 4 contracts. Let's say we're not trailing stops and keeping one on and that type of thing. We all in, all out. How much money did we just make on this trade? What's the profit on one contract? If we have a target is 42 ticks at $1.25 per tick, what's the profit on one contract? Do that math, type it in. First target is 42 ticks and each tick is worth $1.25. What's the profit on one contract? 42 times $1.25 is what? $52.50. We had 4 contracts. What's our total profit? Was 4 times 52.50.
Yeah. 200 something, isn't it?
Get the exact number because we're going to do one more calculation.
Yeah,
Exactly. We want the exact number.
Yeah, okay. There you go.
All right. 210. We just made $210. Thank you, Olga. What percentage return is that on our risk? We risked 535. We just made 200 at the first target, or 210. What is 210 divided by 535? 210 divided by 535.
39%. Yeah.
Is basically a 40% return.
Yeah.
At our first target. That's the low end. That's usually most of our trades, our profits percent return at the first target is between 40 and 50 something percent return at the first target. We might have a couple of trades where it might be 30 something percent, but that's a different, those are optional type deals. But generally speaking, most of our currency futures are between 40 and 50% return to first target. And you can see why it's so much more profitable than option trades, because you don't know what your option is going to be returning, but with the futures, that's the low end. Okay. And so when we go through a little table showing you some historical trades over the last couple of years, what things look like, you'll understand where that 40% is coming from. So if we were risking $1,000 a trade, at the first target, we're making $400. If we're risking $10,000 a trade, at the first target, we're making $4,000. It doesn't matter how big the account is, 40% is 40%. Okay. That's why our approach to doing this is very scalable. Now let's take a $1,000 risk just for simple math. Simple math. if we take, let's say we take 10 trades, and we're at 75% wins. Okay. Well, let's just make it easy. 4 trades, 75% winning trades. That means, and we're risking $1,000 a trade. For every 4 trades, you will have 1 full loss and 3 winning trades at 75% wins. At the low end, absolute low end, that means you would be making $1,200 with 4 winning trades at the low end and losing 1,000 net plus 200. Okay. For most people, that's really good trading. Actually, for us, it's too low end, but that is profitable trading. At 75%, we make money. We want a little more cushion. That's why we are at 80%. At 80% trades, let's say we took 5 trades and 4 winners and 1 loss. Yeah. So 4 winners, we make $1,600, and we have 1 loss, minus 1,000. We're now plus $600. We went from plus 200 to plus 600 by going to 80%. Realistically, we average 80 to 85% winning trades in reality. At 85% winning trades, you start doing the math, you will basically are making a 2-to-1 return. You are making $2 for every $1 which you lose. The math is simple, but it works really well with the futures. That's why we can predict an income by maintaining a certain win percentage. The way we trade is very structured. Your risk is set. Kind of like 2% of the account is ideal risk. If you have a smaller account, you'll be risking more just because you have a smaller account. But as the account grows, you have to think about max risk, 2 to 3% of the account at the absolute max. Now, we bought 4 contracts, but what's the margin on 1 contract? Let's keep that in mind too. What was the margin on 1 micro euro contract? What was the margin for 1 contract of micro euros? You can scroll back and see if it's a data feed. Oh,
205 and 290. Yep.
So it was 290 something, I think, for the euro, right? 290. If you have 4 contracts, what's the margin you're tying up? 4 times 290 is what?
8, 9, maybe 1,011, I think, 1,100.
Okay. Combine that with the stop loss, with the 530 something stop loss. That's how much money was tied up in this trade.
1,500, 1,600, yeah.
About 1,600, let's say.
Yep.
So if you're trading the 4 contracts, your risk is only the 535, but you're tying up another 1,000 something in margin, and that's just the margin is not at risk, but you got to put something up. Okay, the broker is giving you the other 75% of the actual price of those contracts. So that's margin. But you got to put something up. Okay, the margin is not at risk. You will not lose the margin, but you have to put something up. So that's how much capital you'd be tying up in your account for that 1 trade until you take the position off. Now, we did it real simply here. You could have stayed in this trade and still be in this trade if you wanted to be, because it kept going down. Okay, you could sell 3 contracts at the first target, keep 1 contract on and keep milking it for as long as you can. If you have the capital to do that, it's good to be able to do that, because sometimes you catch a nice move, like this is a few months back, but you catch a nice move like this and you can stay in this trade for a while with the remaining contract. This setup happens over and over again. It's a nice big move and just trail, your first target is hit and then you keep trailing the stop on the remaining contracts. Setup happens over and over and over again. Over and over again. The candle has to be red. This would not be valid because the green candle has to be red. Here we have a valid trade, crossover, boom, drop. Your stop loss is up here. This might have gone against you for a little bit, but your stop loss is up here. Good trade. Crossover. It's filled the next day, goes against you for a little over a week, and then drop. This is the killer trade right here. When you get a cross down, it goes against you for a couple of days, and then it just takes off. And these are the ones where you make the biggest profits if you're trailing stops, because let's say you had those same 4 contracts in this situation. You take, let's say, 3 contracts off of the first target, which is going to be hit right around here. That 4th contract, you can double your money. You can keep that 4th contract on as long as you want. You have flexibility how you want to manage it. You can put a second target, you can leave it open-ended, you can do whatever you want with the second contract and just trail stops. You can play around with that last part of the trade. And quite often you can make more money with 1 contract than you made with the first 3. Just with, that happens a couple times a year. So it all depends on how you want it. But first and foremost, get to your first target, lock profit in. After that, then you can play, you can do whatever you want after that. But first, lock in profit. So like I said, this scenario happens over and over again with this strategy. This would be a loss. Okay, it crossed down, stops you out. It goes up. This would be a stop out. Yes, they're all losses. It does happen. To be another nice winning trade. It goes up. The upper Bollinger Band has a touch of upper Bollinger Band. Cross down, trade, boom, nice win. So this trade happens over and over again, and this is how most of our strategies are for how we trade futures. It's always 2 lines crossing, something hooking up, something hooking down, a lot of hooks type of situations and crosses. And then you go through the details of the setup. Since there's a lot more technical analysis, we have multiple charts. So what I do each afternoon, I email out what I found to be valid trades for that day. And it gives people an opportunity to learn the strategies without having to learn all the technical analysis right away, because there's multiple strategies and multiple charts involved. So by me narrowing it down, people can learn at a more casual pace until they're comfortable doing it by themselves. Some people just choose to wait for my email. That's fine too, it's up to you. But it's better to learn to do it on your own. So you don't need me. The more you don't need me, the better off you will be in the long term. But if you need the help, you get an email from me every afternoon showing, okay, here's what I found valid. That will narrow down your analysis time greatly, because we have maybe 10 to 15 different strategies that we go through, but I can go through those 10 to 15 strategies in about 5 minutes. I know what to look for. I've done it so much. I can see, here's how you do analysis. I'm looking for this bear attack. Was there one on Friday? This is Friday now. Was there a cross down? Nope. Let's switch to Aussie dollar. Was there a cross down Friday? Nope, no trade. Switch to Canadian dollar. Was there a cross down on Friday? Nope, the strategy wasn't valid Friday. Go to euro, we already looked at, and I go to Swiss franc. Was there a cross down on Friday? Nope. I just analyzed all my currency futures for one whole strategy, and it took me about 30 seconds or less. So all I'm looking for is 2 lines crossing. I see 2 lines cross on Friday. That strategy is not valid. That's literally how I go through this. So Olga, what do you mean cross down? The 2 lines, what do I mean cross down? The 2 lines crossing down. The trigger line, one crosses below the other line, the 2 lines crossing down. Here would be 2 lines crossing up from bearish to bullish, cross up, and plot 1 crossing down below, cross down. So nothing happened on Friday. There was no cross down. So that strategy is not valid on Friday. So all I'm doing is it goes really, really fast once you get a routine down. And the same thing for all other strategies within the grouping of futures trades we place. I said, when you look at the trading plan initially, you go like, oh my goodness, this is way too much, too complicated. But once you get a routine going with my help with the email, you'd be like, this is not a big deal at all. I'm looking, if I don't see two lines cross, I don't have to spend any time on it. On most of our strategies, is two lines cross or a hook up, or this is a hook down. See the line going up, then down? That hooked down. That's what I mean by hook down. You see when this line comes down and hooks up, that's called a hook up. It's coming down, hooks up. That's what I mean by hook up. I'm looking for hookups. I'm looking for hook downs. I'm looking for two lines crossing. And just about all of our strategies involve one of those types of situations. So it's really easy to visually look for. If it doesn't exist for that day, move on. Boom, 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 boom. If something does look like it might be valid, then you stop and go into more detailed analysis. Otherwise, it goes really fast. Like I said, I do all the strategies in about 5 minutes, because I just look for the setup. If there's no setup, nothing to even continue wasting my time on. All right. Any questions on this? We only have so much time each meetup, but they're all really the same. If I pull up, hang on a second, change this back here. Sort of shifted. And make sure I get the share right. Okay. So whether I'm looking at that, this was Swiss franc I was looking at, or Aussie dollar. I'm pulling up Aussie dollar now. Same scenario, cross down. We see the cross down. This is the one that's in the handout. Cross down, fill within 1 day, goes sideways for a couple of days, then drops. See the question. If there is no cross down and you were in the trade, do you stay in the trade? If there's no cross down, what trade are you in? So that's the question. Over why would you be in a trade that doesn't exist? Or do you mean after you already, once you're in a trade, the technical analysis means nothing. The analysis is to find the opportunity. Once you're in the trade, the analysis means nothing from that point on. It's all about managing the position.
That's what I thought you were doing, was talking about if you were in that specific trade that we were talking about before, and then you retained one contract and you were looking at this, something like this,
we don't,
and you see no you don't actually see it crossing to go up again, would you stay in the trade? But you can see at the bottom that it's still squeezing.
Staying in the trade, no indicator in any way, shape, or form has anything to do in any way, shape, or form with anything once you're in the trade. The indicators and the setup is to find you the opportunity. From that point on, the charts have no use to us whatsoever. It's all from that point on. You actually have to know how to trade and manage your position. So from the time so this finds us the opportunity. Here's the opportunity. From here, you put on your trade with your entry, target, and stop loss. If you're going to be doing multiple contracts, let's say with the same 4 contracts, you sell 4 to first target. First target is hit, sell 4. Now you have that last contract with maybe a secondary target that's really big, but your stop loss was initially up here. You're going to be moving your stop loss down to here someplace beyond your entry price to protect any potential, to protect profits. So once you get past the first target, you cannot take a loss on that last contract because you have moved your stop down below your entry, below the entry price. So you have a guaranteed profit on that last contract. The rest is try to stay in it as long as you can. It doesn't matter what these lines are doing, anything else in the chart is doing, you're now managing the position based on the price of the underlying futures product, not the indicators. Because what this does is irrelevant. As long as you got your stop loss above your price, each day that you have more profit, you move your stop loss down a little bit more. Get more profit, next day, move your stop loss down a little bit more. But yeah, we only use the indicators to find the opportunity. After that, they have no purpose for us. except finding the next opportunity. Does that answer your question,
Yes.
Olga?
Yes. You reminded me about where you put the next stop.
Yeah.
I needed that reminder. Okay, thanks.
So Evelyn, so
Yeah.
do you also take technical analysis to get into consideration? You know, when you see the crossover, do you also look at some candles and, you know, resistance, support, what have you?
No,
Any of those?
Hang on a second. You're familiar with the option strategies. They're the same.
Yeah.
They're in a similar type of situation.
Uh-huh.
The parameters in the setup and trigger, that's it.
Yeah. Okay.
If we put in more criteria,
Mm-hmm.
it doesn't get us a higher percentage wins. It just gets us fewer trades.
Okay.
So there's a point where, okay, we're at 84% winning trades. If I put in more criteria, I'm just going to get less trades, but it doesn't
Okay.
really give us any more profitability. So there has to be a line in the sand for us, like myself and Becky. 80% is our low end that we will even accept for futures trades, because we know we are profitable at 75%. But we want cushion because stuff happens, you know. Mistakes happen. The market doesn't always cooperate with us. Like the first few months of the year, we were literally averaging a flat, even 75% wins. It was literally 75% wins for the first several months of 2023, which means we're profitable, but we're like at the low end profitable, right? But the last couple of months, boom, you know, no losses.
Right.
All of a sudden, it starts adding up really fast. That's something I want to look at right now, because there's always a question: how do we actually make money doing this? And you got to approach it in a very business-like kind of way, in a structured way. The more structured you are, and treat stuff in a business-like manner, you'll find yourself much better off and making a lot more money. I'm going to go through this. I asked Becky to put together a listing of based upon what we currently have in our trading plan, the different future strategies. If we risked $1,000 a trade based on a 50 grand account, which is $1,000 is 2% of the account, what numbers would look like? Now, your account can be any size. It could be 5,000, 10,000, 20,000, whatever it might be, a million, 100,000. It's percentage return, not dollars and cents. Okay. It's all about percent return. If you focus on dollar, it's the exact same trade. If you want to make $1 million trading this year, start with a $5 million account and get a nice 20-something% return, and you'll make $1 million. People always ask me that. Well, I heard about this one company, they made $1 billion. They didn't make $1 billion by starting with several million. They made $1 billion by starting with a $10 billion account and got a 10% return on it. That's how they make $1 billion. They don't start with a $500 million double. That's not realistic. Okay, it's a percentage return on your money with a fixed amount of risk. So let's take a look at this. I asked Becky to put this together going back to 2019 to show you how money is kind of made and lost with these strategies. Usually is anywhere from maybe, in the most cases, 7 to 15 trades a month. You don't get trades every day. You might get something valid. You set it up, but it may not fill, since it has to actually go down to fill a short and go up to fill a long. You might have more trades valid, but they don't get filled because they went the wrong way. So we don't want to be in trades going the wrong way. You're going to see numbers here. This is based on $1,000. If you see 429, it means that was a 42% return. If you see 34, the 34% return, different strategy. Okay, 45% return, 52% return. Okay, at the first target. We can only predict at the first target, all in or all out. Beyond the first target is up to the individual how they choose to manage. But if you just want to do the minimum amount of work you can be very profitable because you are booking, usually in most cases, at least 40-something% return at the first target. And as long as you maintain 75% wins, cha-ching, you guess what? You make money. You make good money too. So let's take a look at 2019, beginning of the month, or the beginning of the year. You had, you were filled on 5 trades. There might have been 10 trades valid that month, but the other 5 didn't fill. But when you are placing your order, you still have to allocate the assets. You have to allocate the margin. You might have, today, you might have 5 trades valid today. Only one of them might actually fill, but you have to know that you need enough capital to tie up the margin and stop. Using the example we just went over, it took about $1,600 between margin and the stop loss dedicated to that one trade. Well, if you have 5, let's say we had 5 similar trades today, and you don't know which one will be filled, or they might be all filled, but you have to be able to have enough capital to allocate money to all of those, knowing that they might all get filled, or only one might get filled, but you have to have enough money to allocate. So that's why you have to really think about the percentage of your account you allocate to each trade, because there might be many more trades coming up, plus other things you're trading. All right. Let's take a look at this now. Once the year starts out, you have a net loss. It happens, okay? You had 2 full losses and a couple of first target wins, but you came with a net loss. Next month, hey, good month. You had 4 filled trades, good return. Next month, boom, that's pretty good. And let's scroll down. As each month goes by, this month was awesome. For July, you had a whole bunch of trades and no losses. By the way, this is what it's looked like for us in this year, in June and July. No losses, basically. Okay. October, beautiful October. That's a percentage return on the account for just that month. Just that month. Annually, we made $28,000 on the account, just based upon 2% account risk and a 50 grand account. Okay. If this was a $25,000 account, this number would be $14,000, but you'd be risking less money. Okay. Everything is proportional. So we have to kind of figure out what you're going to trade and what percentage of the account you're going to risk. If you're only going to trade certain things in your account, maybe only currency futures, then we can go more than 2%. We might be able to go 4% or even higher, because you're trading fewer things, just maintain a percentage win. So everything is flexible, but I'm giving you, I want you to see what it's like to have 2% account risk per trade, and just trading a 50 out of 50 grand account. Like I said, this number can be 100 grand, this can be 5,000, it could be 10,000. It's all about percentage return, which doesn't really change that much. But if you have a smaller account, you might be doing 4% account risk. All right. 2020, when everything shut down. Everything shut down in February and March. Our trading was one of the best years of trading, actually, was 2020, when everything shut down. One of my favorite years of trading was 2020, because I had nothing else to do. All my sources of income was shut down in 2020 except for trading. And I really focused on my trading, because this was my only significant income. So this was a really good year for me, because I literally had nothing else to do that year, for the most part, for months and months and months, after everything shut down because of COVID. But it was a really great year of trading. And lots of trade, lots of volatility, lots of ups and downs. You see the first half of the month is all buys, then it became all sells as time went on and the market started going crazy. And then as it went back up in March, because the drop only lasted about 3 weeks. And then a whole month of it just became long. The market rallied, cha-ching. Percentage return for the month, and based upon 2% account risk, money adds up. I know other people have a lot bigger accounts, and these numbers can become quite significant based on a bigger account, because this whole strategy is very tradable. Whether you're trading the indices or the currency futures, is very tradable, it's scalable. smaller accounts, focus on the currency futures and indexes in certain trades. Okay, keep going right through the year. And October 2020, I don't even think we had a losing month. Okay, here was the percentage return for the year, 63%. And for all option traders out there, way better, bigger than usually option accounts. Okay, if you're in a structured trading in a structured way. Once again, that's why I like doing futures, because this gives me great profitability. And the end of year is usually pretty good. The end of the year between October and December, usually see a lot of these buy signals. So when we see buy signals happening at this time of year, cha-ching, I always tell people best time to trade between October and April, especially alongside in the October to December timeframe. That's where a lot of money is made. Okay, that's 2020. Right in 2021, continuing the win. What a beautiful February. Okay, we buy market bottoms, we short market tops. Our short strategies are like super good. We really, a big strength of our future strategies is shorting. We're really good at shorting markets, especially the currency futures, especially. That's one of our strengths of our strategies. Now, let's take this as an example here. Depending on when you started, you will either like me or hate me. Let's say you started trading right here. You get a win, then you get a whole bunch of losses in a row. You will literally be cussing me, having bad thoughts about me, second guessing why you ever signed up for this program because you just lost all your money trading this strategy. Because that's what happens depending on when you start. You have to have a big picture. That's why I have this, so people understand the big picture. When you start, might be just as you having these sets of losses all at the same time. You might not have been up. If you were up here and then had a bunch of losses, then it's great. You're still finishing the month positive. But if you had started this trading with me, like right here, and then got all these losses here, then you start questioning everything. And quite often people stop. It's like, I don't want to lose any more money. This program doesn't work. That's why I put this out. So you have to have and understand the big picture. Losses will happen in bunches. It's normal to have 3 to 5 losses in a row. It happens. But that's why we have strict risk management on percent of account. So you can never, ever have a big loss. This is how we trade futures. The same trades I show here is the same trades myself and Becky take every day, every week. Okay, this is very exact stuff. The same way I went over it on the example. We do that every day, every month. It's the exact same stuff we do. It's no different. We calculate the risk, number of contracts, place the order. I go to the gym, I go train. I train in jiu-jitsu every day or kickboxing, and I teach classes. I have city official duties. I go right now. I'm SAG-AFTRA, so I'm on strike, but we got the okay to work on independent projects only. So I can still work on films and some commercials, just that I can't work on the ones being produced by the big studios right now. Just independent projects are only. So I am on strike, but now we do have a bit of work that we can do. But that's all stuff I do by being able to have all this free time from trading. Year goes on good. As long as you keep trading, if you kind of like here, you have a bunch of, you made some money, lost it all, made some money, lost it all, made some money, lost it all, made money, ended the month positive. This is the big picture outlook you have to have and understand the big picture. You have to keep trading, because if you get stuck up in a couple of losses, you have to get past the losses to get back to the wins. You're gonna have a lot more wins than losses, but if you get stuck in your head on the losses, when the year ended, we had a bunch of losses in December. So we had a kind of ends of the year kind of a down note, but however, look at your big picture. You booked $28,000, and like you can say, well, it could have been 32,000. Hey, you gave back some money at the end of the year. It happens. but you had a 56% return on your account. How many of you have that on a regular basis on your accounts? Very few. But this is in a structured way, in a business-like manner, and I do everything in a business-like manner, totally by the numbers. I don't speculate. Everything has to be by the numbers. And that's what works for us. 2022, we had a couple more losses as we go through. You keep trading, and like I said, our currency futures short strategies are the best. Okay, along you just have to have enough capital to place the trades, and the money adds up. You're gonna have a couple of losses in bunches. We had that, a couple of losses in bunches, and it's discouraging because we had 2 back-to-back losing months. Here's how I explain this to everyone, or some of you are on my email list. You see it. Every year you will, even at 80-something% wins, every year you will have 2 to 3 losing months. That will be negated by 2 to 3 winning months. This winning month will negate that losing month. The other 6 to 8 months of the year will be the winning months that will represent your profits for the year. 2 to 3 losing months negated by 2 to 3 winning months. The other 6 to 8 months will be profitable. That is your net profits for the year. That's why you have to keep trading and not freak out after a couple losses. Consistency. So a big part of what I do with my coaching clients is I encourage them to communicate with me on a regular basis, have me go over their trading accounts with them, their trades, make sure everything's looking okay, not making any major mistakes, because we don't want mistakes. We don't want that to screw anyone up, but you get to try to take as many trades as you can. You won't be in every trade. That won't happen. It's unrealistic, but you try to be in as many trades as possible. Try to book as much profits as possible. When the year ended, it wasn't as high, but it was still profitable. A lot of the trades once again, in December, we gave back some money. December usually isn't the best month of trading for multiple reasons. If you didn't trade in December at all, you probably get much better results, but it's hard for us to not trade. So, but that can be a rule you create for yourself. You look back at the history and say, I don't see any good reason to trade in December. I'll get back to it next month in January. And you probably end up having better results realistically, but we wanted to show the worst case scenario by putting on everything here. And here we are for the year so far. We had a couple of, like I said, 3 to 5 losses was normal. It happens. They happen in a 2-week period, and then boom. So that was the losing month, flat month. And here we are for the year so far, up 19% on the account. Last 2 months, no losses. It just adds up really, really fast, and they come in bunches. Anyway, that's how we trade, and that's how we make money on a very regular basis with the futures. That's why I like futures, because it's a very predictable income. Unlike options, I have no idea how much I'm going to make, but I know as long as I keep trading, I'm going to make money. But with this, I know I can book a nice, comfortable 20 to 50% return on my account almost every year. And I learned that from John Carter way back when he was using an example of $100,000 account and saying there's no reason why you can't generate $50,000 a year from that. That was one of my first experiences back in 2006. He was using that as an example when we were learning futures from John Carter and Hubert Center's Trade Markets. And he used the example for most of the people he's working with. As an example, if you have $100,000 account, you should be able to generate $50,000 a year, and a lot of people can live on that type of money. Maybe not in the Bay Area so much, but it does make a big difference at bringing that extra income. And that's why we like it. That's why we love futures. We've always loved futures. Our first experience was with options, but as we learned futures, it was like, wow. And now that we have the micro futures, margin is a non-issue. So otherwise, margin can take you out a lot of trades. Like you saw that Bitcoin futures is $62,000 for one contract. We don't trade that. It's just too big. But the indices with the micro futures is 1,000 something or less than 1,000 sometimes for one YM or ES contract. I think it's a little bit over 1,000 right now for one ES contract, micro futures. Then you can trade all the stuff you want to do with the micro futures. Only if you have a bigger account, go full size, no problem. You have any questions so far? on anything whatsoever before we move on? You need to type it in or unmute and ask. Okay. So about a week ago, I did an interview on a podcast. They're going to be releasing that interview. It's about a 30-minute interview about me, my background, trading, martial arts, my engineering background, a few other things, and how they kind of all tie together, and including futures and options, and how they kind of one affects the other, so to speak. So I'm going to be posting that. It should be coming out sometime, being released sometime in the next week or two. When it comes out, I'll email a link to that to everyone so they can see a bit about me and that interview. And it's a good one to take a look at, because I do talk a lot about also things come up like what I think separates the traders who are successful with the traders who are not. And it'll make you think about yourself and why you're trading and how does that influence your success or what drives you to it. So I talk about that also. And that's based on observation with people I work with. Seeing the people who actually can make it successfully trading and those who, I'm not saying are unsuccessful, but other things take priority, so to speak. So I'll talk about that in that podcast. Also, we might talk about it during one of our future meetings after the podcast is out. If you're interested, okay, here is also a listing of those trades. So if you want to review those on your own, if you want to set that up, you can set up the trigger lines on Thinkorswim. You can set them up on NinjaTrader, and you can go through this type of stuff on your own to try to set it up. Anyone I'm working with as coaching clients, then those are people who I provide all the charts and indicators to. So it's already done for you. If you're interested in working with me, I do everything one-on-one, all one-on-one coaching. I don't do big group things. I'm not a fan of the big group coaching thing because everyone learns in a different way. Sometimes I might have to say the same things 3 or 4 different ways for someone to understand what I'm saying, because they don't always get it the first way I say it. There's some things I think are simple that certain people think are just way complicated, and certain things I think are really complicated, other people get it like that. So I don't know which you might be. That's why I have to do everything I prefer one-on-one to make sure you get it. And I don't, right now I'm lecturing. I don't lecture when I coach. I make sure you can follow, you're doing the calculations. I lead you through, so you have to understand it. So you can't just nod your head with me. I need to know that you actually understand what you're doing, because you got to be able to go and do this on your own. Futures might take a little bit longer with the analysis, but once you, like if I showed you the trading plan, you're going to be like, whoa, this is a lot of stuff. That's just there as a reference. You have to learn the strategy by me teaching it to you, showing it to you, you understand it. Then you go back and look at the trading plan. Oh, that's what that means. It's just a quick reference. You know, because it's complicated to try to explain everything on a chart in words when it's just a visual thing you have to see and recognize. So once you can see and recognize it, then you can read the words and understand it. Otherwise, it'll be, that's why you can't learn from reading books. It's just doesn't work like that. All right, so 1745, if you contact me before the week is over, I'll take $100 off of this for 1645. And we focus on all those contracts, and it's going to be at least 10 different strategies we're working on, at least 10 strategies. We can't get every single trade on one strategy. We can buy market bottoms with one strategy, but that's only works when the market's down there, not a market's up here. We now need a different strategy to buy it up here for a trade continuation or trend continuation. That's a different strategy. Up here, we're going to short it. Takes us down to here, but we need another strategy to get into a trade once the downtrend is now established. Next different, so different strategies get you into different trades at different points in time. So that's why we need multiple strategies. And that's what's in the plan. And then what you can do, you can put it into a table like the way I just went over the profit and loss. There might be certain strategies you don't want to trade. You look at it, you're like, you know, it seems to be like too many losses with this one particular strategy. I don't like that one. I'm going to leave that one out and trade these instead. Or I'm going to just trade the currencies or the index futures. So you have a lot of flexibility in what you want to trade or don't trade. Just go over it with me first, and then we can put a plan in place. We can also do something, if you're trading currencies, you can risk as little as $100 or $200 on one contract and just trade one contract you want to learn on one contract. Remember what we did a calculation? It was 107, it was like 100 and whatever something dollars, $107 risk or whatever it was per contract. You can trade one contract and risk 100 and something dollars just to learn. So your minimum risk is going to be 100 and something dollars per contract, and you can learn on one contract if you want. And then as you get more comfortable, you start adding contracts, you start doing bigger trades, but you can learn with trading small with the currencies. That's what I like about currencies. You can trade size as big as or small as you want, especially with the micros. And if you want to do the futures and options, let me know. I will take $500 off this price if you're doing both with me. This is going to take several months to implement both futures and options. But let me know and we can set that up. Let's see, futures. And I think way back when, Nick, when you did the options with me, I think I might have given you that same option. If you did it in the future with me to do the futures, I would give you that same discount. So that still applies. Okay.
Okay.
So just let me know you get the exact same discount we just talked about, and that was a couple of years ago.
Yep.
Cool. All right. So, and we go through this. I try to review stuff with you every 3 to 6. It takes 3 to 6 months of commitment on your part, trading the strategies. I can go through this with you and work with you over a couple of weeks one-on-one to implement everything, but you have to commit to trading the strategies for at least 3 to 6 months. Because you have to, this might be the month you have the losses, and when you start, you're gonna be like, this sucks. That happens. Or it might be the month where you have no losses, just win after win after win, and you'll be like, woo, but you have to go through that period when we have the losses and have the losses and have the losses, and then come back on the other side of that. So you have to go through that to really appreciate it and come out the other side. That's why I said just you commit at least 3 to 6 months of consistent trading of the strategies. You can trade small if you want, but 3 to 6 months to see the profitability. I had one person working with, he made a whole bunch of mistakes and still up 20-something% after 7 or 8 months of trading. And they made a lot of mistakes. He was up way more than that, made mistakes and still up because the foundation was there. He had his risk managed. He made some mistakes, but had his risk managed each trade, had a stop loss always there. So never a big loss, but you make your mistakes and still not lose any money. That's pretty good. And especially with futures, because you got the fundamentals in there of risk management. All right. Probably going to not do another meetup in August, but we'll probably do one because a lot of people are going to be gone on vacations and back to school. People who have kids are taking their kids to college and everything else. So we'll probably do one the weekend after Labor Day, and another one maybe 2 weeks later. We'll probably do an options next and maybe futures right after that. So probably the weekend after Labor Day will be our next meetup. That'll be either options or futures. We'll see. I'll see what people want. I take feedback. Email me, contact me. If you would like to work with me on the coaching, it's all one-on-one. If you're in the Bay Area, you want to work in person. I prefer in person. I'm in Santa Clara. My preference is in person. Nick, he actually worked with me during COVID. He actually came over to the martial arts academy where I trained because that was the only space available to me as an office. So the owner of the martial arts studio, I was actually renting office space, the space from him to have my meetings, because every place I usually have meetings at was shut down. No one was allowed in. So we actually used that martial arts studio as a meeting spot to have our meetings and trainings, which was actually a great opportunity there too, because it was so hard to find a public place to meet.
Yeah, I remember that very well. Yeah. That's right. I remember, yeah. Yeah.
All right. So let me, next week when that podcast is out, I will send that out. Good one to check out. It was that was the first time I've been interviewed like that for trading related stuff. I've done stuff for my kickboxing many times, many times for kickboxing, but never for trading. And I was told there was no questions given to me in advance. So I didn't know what to expect. I wasn't going to be an ambush attack or what it was, but it was really good. It was really, really good. And good questions too, that I actually knew the answers to, because it was, I didn't even have to think about it. It was like, it was great questions, but it was a really good podcast. I hope to do more of those. Now that I know kind of what to expect. I might see about doing more of those, but that was really good. All right, so I'll see you guys in a couple of weeks. And if you want to work with me on coaching, just call me, email me, message me. I'm very available. You have my information on my website also. And on the handout. Once again, I'll put the link for the handouts in the chat window. You go to that page to download everything. And I'll be in touch with all of y'all in the very near future. Y'all have a good day.
Thanks, Eversley. Thank you.
Thank you, Nick.
Bye-bye.